Hey everybody, what's going on? This is your boy TerrenceRe. Got an afternoon market checkup. Checking in right now. Let's take a look at the market. Got a nice down day going. We got the S&P futures down about 3.25%. Got the Nasdaq futures down about 4.25%. Dow futures down about 2.5%. Got the Russell futures down a little over 3.25. I'm reading right over here from the top, from the top of the screen over here, my watch list. The VIX is up today. VIX futures is up, both up almost 5%. We got the bonds are down. Got a full-fledged sell-off today. Got oil futures up. Oil being up, mainly, I guess we could, place that at OPEC's blame. I guess, OPEC saying that they're gonna cut back production, and I guess that basically they're going to decrease the supply. So if you decrease the supply and the demand stays the same or increases, then price should go up. So that's what we're seeing in the oil market. Gold is down about 1%. We're going to talk about gold. I got a position on in gold. I'm going to take a look at, well, shoot, since I'm running down here right now, let's go ahead and pull that gold chart up and I'll tell you what I'm looking at. All right, let's see. So basically on gold, you see I got some Fibonacci levels on here. The yellow is the Fibonacci expansion, and the red would be the retracement. I placed this trade. I was looking at the 4-hour, and basically I got a bear flag. If we're looking at it right here, jumped off of the low of 1622, got a pullback here, and then took out this high. I've already hit one trade on this, and I entered into another trade because I'm, thinking it's going to go all the way up and touch this level up here, my last level at 1858.6, and probably because other people will be looking at it as well. I got an alert to let me know when market price is 1850 on the gold. These are the gold futures /GC. And so I got a put spread on. Now, we'll go ahead and talk about that put spread since I got it pulled up. That's on the docket for the show. Now let's go take a look at what that trade will look like. I'm gonna pull up my TastyWorks platform so we can look at it. If you look right here, you see I'm down on the position right now, but that's fine. I expect a little retracement, but that's fine. Let's go and go to the trade tab so we can look at it. All right, now come on. Let's see. You'll see right here. You see my position is at 19 days, and right here at the money. And I didn't place this at the money. It just so happened that I placed it was some right here, and the market is retraced some. So I got 19 days on this trade. I collected $1.60 in premium. We're gonna pull up the analysis tab so we can take a look at it. So when I come here, as you guys are looking at it, you see the red is where I would lose money, and the green is where I would make money. And right now, price is right around in here at 1703. So we just want the market to stay right in this range within the next 19 days. I'll be able to keep my 160. Now I will manage. I'll take 50% of it. So as it gets closer and time continues to decay, time passes. This particular trade will, in this particular trade should. What's the word I'm looking at? Decay. So that means that I'll get time decay and theta decay. The vol should decay as well, or volatility should contract. And with me collecting 160 on a $5 wide spread, that would mean that I'm risking 340. So time goes by, I'm looking to maybe make $80 out of 160. So I'll look to close it early. And that's basically all that is. It's a put spread. I sold the 1700, bought the 1695. Now let's go back and look at the chart, and then and you can see we right here, right? And so my put spread is like right in this area. Now I could see it coming down into here, which is fine. I got 19 days. I could take it coming down in here, bouncing around, and then shooting up. That's what I think. And I put my money where my mouth is. So we've seen that. Next on the docket, let's talk about Google. Pull up the Google chart. Now Google, let's pull up, I'm going to pull up my, what I call my active trader setup. Let's get that off of there. Where are you at? Click there. Now, don't that look sweet? Look at that channel. Look, see how Google traded in a channel? Touch. So we got touch, 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 touch. It's 4 touches. Then it come down here and break out through the bottom. Now, normally when you see patterns at the end of a move, and when I say at the end of the move, I'm going all the way up here at the high. I'm watching it come down here. When you have patterns like at the end of a move, whether it be a triangle, it could be an expanding triangle, a pennant, anything like that. When you see those type of formations, usually, not all the time, I could be wrong, right? It could continue to go down. But generally, I like to trade counter trend when it breaks out of that channel or that particular price pattern action, because you'll normally see it come back up and test this level, and then it may go down some more. But if it just comes up and tests this level, then that's about $8 from where it's at now. So I put this trade on today. If the market is down, I wanna get into the market, right? As a contrarian, you want to buy low, you want to sell high. So the market is coming down low, I want to get into it. We got this down move, we got a up and a pullback. Boom. Like the rubber band is pulling back. I want to catch the slingshot if I can. So what I did was I did a defined risk trade, a small trade, sold another put spread. So I'm getting bullish into this sell-off. Now I made my money earlier on Tesla. You can see made about 71.97 on Tesla today on a short position that I had that I closed out. Right? I've been short on Tesla. If you've been following this, I've been short on Tesla all year. And it has nothing to do with fundamentals, really. It's just the fact that we got a Federal Reserve that is raising interest rates, which is bad for equities. So raising interest rates is like they say, don't fight the Fed on the way when the market was going up and we had low interest rates or quantitative easing. Now we got quantitative tightening, and we have a Fed that is not accommodating the market. So with that being said, that's my little fundamental spiel. So I got in Google. You see I'm down about $6 on the day, because when I got in, it wasn't as down as much as it is today, which is fine. It's a defined risk spread, so I don't need a stop loss or anything like that. I came in 42 days out, sold the 98 strike, bought the 95. It's a $3 wide spread. I think I collected 114, and right now it's trading for 120. So I want to see a pop. You can see technically, I didn't mean to do that. I don't want to look at the chart there. We're going to drop this down and we'll go here. See, technically, if we're talking about technicals, you can see I put my Fib retracement on. Boom, hit this low, high, and we're right here at the sweet spot. That would be my 618 or my 38.2, just depending on which way you got the Fib retracement going. That's my sweet spot right in here. So I want to get long here and try to catch it up to this area. If I get this pop, I'll be able to get out of that trade for maybe 50% of the premium that I collected. Look to make $50 or so on the trade. These are small trades, trading often, trading small, trading often. Not putting a whole bunch of risk out there. It's a $3 wide spread, right? We call that the box in options. So from here to here, that's your box. $3. Sold the 98, bought the 95s, that's $3, $300. I collected 114. What does that leave? 186. So I'm risking $186 to make 114. Now you may say, hey man, you risking more to make less. That's putting probabilities on your side, making high probability trades. And most people do that anyway. Most successful traders, even investors, you probably be go buy 100 shares of $100 stock. That's 10 grand. Now they may only margin you 5 grand. They go up a buck or two, and the guys get out of the trade. They made $100, $200, but they don't put up 5 grand. So that's why the more capital you have, the easier it gets to invest, because you have more capital, you can take more shots. The key is, in my opinion, is not to risk it all on one trade. So the type of formulas that I'm using here today are showing you anybody can do it with a small amount. You might start your option trading account with 2 grand. Now I'm gonna show you some little big boy trades that I've placed as well in another account, not in this one. And gold, for instance, I got long gold today, GLD. Right? It moves with the gold futures. So I'm gonna show you. Pull up the gold futures. This is the gold futures, right? You see it? Now let's pull up GLD, which is an ETF. This is a stock. Looks similar, don't it? Right? So let me tell you what I did. Instead of putting on a put spread, because in my other account I got a little bit more funds, I bought leap options. The leap options that I purchased, let's go back here. I came out 161 days. I'm in March. And I bought leaps out here at 170. Yeah, I got leaps right out here. Paid about $450 for them. I got 161 days. Now, the time decay is not as significant when you're buying options on leaps. That's why I went further out in time. And you can see you got about 5,000 options out there. So other people are out there trading those with me as well. Let's look at the volume. So you got 15 of them traded today. Of those 15, 2 of them are mine. There's about 2 of them. So I'm looking for this to be there. I got 161 days for it to be there or to make it there. And more than likely, I'll double my money if it makes it there on those 2 options. So that's a way of trading a little bit larger on the gold move. Let's take a look. What else I got on the dock? I had to put something up there to make sure. I wanted to talk about, so if you don't want to do options, let's say oil, because oil is up today, right? Let's talk about everything else is down, but oil ain't. USO, check it out. I do think USO will make this move and somehow get up here and test this area of resistance where this gap is back from June. You already see it made off, boom, pull back and boom, bust up. So we all the way up into here. It may at this fib levels, we may see a little bit of resistance. We'll see. But I still think it got a little bit more of a move. So you may pull back a little bit. And then you may get another move up into here. I like this breakout, as you can see. It's a trend line drawn right here, and it gapped up and bust out of that trend line. So it may come back and test this trend line, retest here, and then go to the upside. So I am bullish oil. I haven't placed a trade in it. I don't want to get long while it's running away from me. I want to get a pullback. I'd rather get long into a pullback. let me get a down day instead of chasing it. I'm gonna talk about the FANG stocks. I think I already went over Google. We can talk about what I say. Meta got a little bit of divergence. Let's see if it plays out. And when I say divergence, take a look at the RSI. We got a low. RSI is still up, but as you can see, price action has taken out and made another low. Will we get a bounce right here? Got a trend line here. Broke that trend line. It's possible for it to bounce up into there. I don't really like Meta fundamentally. I don't know if anybody else, whenever I'm on Facebook, it doesn't have the same like it did when it first came out. Most of the time I'm on Twitter. I post trades and charts on Twitter and interact with people on Twitter and then Instagram. And I know that Meta owns Instagram, so maybe, but if you're just talking about the Facebook aspect of it, it's not like it to me. So I don't really see the value in that. Now Google, I see the value in, obviously, because I use YouTube, and I think they are getting ready to make some improvements with their shorts. I was listening to Mr. Beast, or someone had an interview with him, and he said something about the split for the shorts is more than TikTok is paying. So he was predicting that maybe you might see some influencers come from TikTok over to YouTube. So, but I like YouTube. I like Google. Out of all the stocks, so I'm more bullish on Google. You know what I mean? So I'll be looking to trade Google as much as I can over the next, I don't know, few months. I like the technical setup as well. It breaking out of that channel, I think it's gonna come back and test that channel. Well, we'll see if I'm right or if I'm wrong. But the one thing is, I put my money where my mouth is. So that's why I'm showing you guys these trades. I did want to talk about SPX and next week's expected move. Now, we got an expected move next week in the SPX, which is the options market for the S&P 500s. Purely options. No stock on the SPX. So if we're looking out 7 days, check this out, guys. $119. So next week, within a week, they're predicting another 100, basically call it 120, another $120 move. I mean, they're predicting that this market is going to jump next week again. Now, me personally, I can't see it jumping like that 2 weeks in a row, just barreling down. Yeah, you gotta figure that you're gonna get an up move next week. At least I think so anyway. So I'm gonna come out here. Let's see if we can do a butterfly, an expected move butterfly just for next week. Let's do something. I'm gonna do something live while just cause I like trading. So I'm gonna come right here to the end of the ruler, this expected move. Let's sell 2 of these. All right, now let's come over here. Let's buy this. Let's buy that. Click on that and make them, that should only be 1. There you go. See that? So that's a butterfly. Ooh, let's see. So right now I probably can get this field for like $10. Risk like $10 and make 500. Let's see if we can get it on before the market closes. Let's put it on at, let's see if we can get this locked in at 10 cents. At 10. Why is it saying invalid? Ain't nothing wrong with this order. There you go. Just give me an error code. Clear this. The hell? Market moving. I'm trying to get the trade on. So you can also come up here and go drop this butterfly, right? And then it'll bring it up for you, and then you just drag it. It's what time is it? 3:56. Trying to get this on for the market close. I want to have this on. All I'm doing is dragging it. So butterflies like this, you just want to, where you think the market gonna get to, and it, okay, 10 cent. Ain't nothing wrong. What's wrong with that? I got feel kind of fast. I feel like a sucker. Like maybe I paid up too much. So basically, I bought a $10 expected move butterfly. You can see it right here. I only paid $10 for it, guys. So I'm risking $10 plus whatever the commissions are for it. No matter what you see it move right here, most I can lose is what I paid for it because I bought it. I paid $10 for it. That's it. This is most with the opportunity to make $490. Right? So all I gotta get is a rally next week. And there's no, you be like, basically there's no reason why, like, that I did. I just picked up because the market, I mean, we got this killer down move. I'm like, man, I just don't see us. It just, now we could get some more bad news and it can gap down next week. That don't mean nothing, right? So, but anyway, I just felt like taking advantage of, we got a big down day. Maybe we'll get a little pullback next week, and I'll close it out. I won't try to make the whole 490. If it go up and run through my strike, I may be able to get out of $50, $60 next week. Pay 10, hit $50. That's just something to put on. I like to put stuff on while I'm doing the video. So hey guys, if you got something out of this video, hit the like button. It don't hurt anything to hit the like button. It helps out with my analytics and get my stuff up on my YouTube channel. I do this for fun and for free, so I don't charge anything. Not on my channel. Hit the subscribe button, hit that like, share it with somebody. And if you got any questions and you like a stock that you like, or you want to see me, mark it up, do some technical analysis on it, show you what, some of the things that I look for. You want to see me do a certain type of trades, you want to see me work on a certain type of trade, I can do that too. You want to see me model a trade, I'm thinking about doing a course like on different option trades and what I look for, and talking about like exactly how I pick strikes using delta. Because when I sell options, I'm looking for a particular